Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 17, I believe. 17 already, wow. And look, this week it is a minefield of information, articles, stories, news, whatever you want to look towards. There's so much out there this week. And to me, it was difficult to really know which one to tackle because there's just so much information and so much news in the media that is relevant to you and your financial growth and wealth growth. And so I've settled on this one, but before I dive into this article, I want to just touch on a whole host of things that have come up this week that we could have talked about, but I didn't want to, given that some of them it appears we've been talking, or feels to me like we've been talking about nearly every second week on these episodes. So once again, here in Australia, we've had another interest rate rise, 12 in the last, I think it's 13 months now, just an astronomical scenario. There's debates going on about whether it's the right or the wrong thing to do, but there's certainly a lot of news and data. This is now starting to be supported by data that maybe the RBA has gone too far. And there's lots of commentary around, it's around. It's out there of people who are suggesting that this one is just a step too far, and that we haven't really allowed the previous interest rate rises to have their full impact before we're just dumping another one on everybody. So there's news there, and that's obviously a lot of fear-based news. That is potentially going to cause people to be very concerned, and rightly so. There's a lot of people that are going to be under extreme mortgage stress as a result of this latest increase. We've talked about it multiple times on these episodes. We've talked about the fact that there's a whole bunch of people who have been on low-rate fixed interest loans that are about to come off those loans. Their repayments are going to effectively triple, and that is going to put enormous stress, mortgage stress in particular, on their monthly cash flow in the household. So there's that going on. Then we've got, for those that are interested, not me, but for those that are interested in the crypto market, there we have it this week, another two entities getting in trouble in the US with the Securities Commission. Two of the biggest providers or market makers, whatever you want to call them, that are getting in trouble, causing, again, more uncertainty in the crypto market, and that is effectively why I've stayed out of it, because it's just so high risk. And, I know there's plenty of people making money out of it, and there's also plenty of people losing a lot of money in that market. But for now, very high risk, unregulated, so therefore you're going to have some competing powers who want control of that market, causing all types of ups and downs. So that's in the news. We've got property market news, stock market news, another bank in trouble in the US. Then you've got AI. You've got a company, NVIDIA, just going gangbusters in the US market because of its exposure to the AI market, artificial intelligence. So there's just so much news out there. So with all of that going on, it's like, well, which one do I talk about? Well, I've talked about them all already. But here we've got this headline, fear of missing out, leaving Australians worse off in their investments. Now, you can insert US, Canadian, New Zealand, whoever you want in that headline. The key here about this story, and we'll just dive into it a little bit, is that it actually reinforces what I've been saying on these episodes, and I say to in my blog posts and in my social media posts and when I'm in conversations with clients and prospects, that this article kind of just sums it all up for me. And it's basically that the majority, and let's face it, most people want to be a part of the majority because that's, the social norm is to fit in, to feel like you're part of something bigger than yourself, and therefore we follow these social norms to fit in. And one of those norms is that we follow the crowd when it comes to investing. And I'm here to tell you that that's exactly the opposite of what we want to do. And this article touches on it about the fact that we get sucked in to these psychological stresses that are really prevalent in the news because of the cost of living crisis, as their word, not mine, crisis. And people are fearful in these times, and that always reminds me of the very famous Warren Buffett quote about being fearful when everyone else is being greedy, and be greedy when everyone else is being fearful. Well, right now, people could not be more fearful. So therefore, it's time for you as an investor to be greedy, not to get sucked into all this psychological noise and do the opposite and sit on the fence. So this article in particular, it's this general manager Tim Wallace of SIFE. He's talking about the fact that Australians, or Americans, Canadians, New Zealanders are at risk of losing out on their investments as rising inflation creates economic turbulence. Because basically it's talking about how people tend to sell at the time of fear and stay out of the market, and it's a dangerous thing to do. So let me just get rid of that. Mistakes that we make are based on emotional responses. We sell out at peak fear, not at the peak of the market, but at peak fear, and we buy with FOMO. And this is normally dangerous, especially when markets are volatile. That's what Tim Wallace was saying. And so, making these decisions based on a lack of knowledge or a lack of time spent researching or poor information or advice. And that the net result is that people are worse off in their long-term wealth perspective. So all those things that I've been saying throughout these episodes, and I say everywhere else, let's listen to Warren Buffett and let's do the opposite of the crowd, the opposite of the norm, because we all know that it is these times where the wealthy are being extremely greedy with their investments and locking in long-term gains. Now, that doesn't necessarily mean that they're buying today and watching their returns skyrocket straight away. No, they're much more patient. And what they know is that they're getting a discount today. They're getting a discount in these times where markets are soft, and they're then locked in, ready for when the market does take off. So it might not be the bottom, but they're getting prices down here so that then when it takes off, they're already in the market, not trying to buy all the way up, or starting to buy all the way up. Now we at the Investors Way encourage buying on a consistent basis, because we never know when these times are going to come. But if you're greedy now, and that's the thing, wealthy investors don't just try and time the market. They're greedy when these times are happening, because they're loading up knowing that the good times are coming. And that is why they end up being wealthy. And I think that's what this article is trying to reinforce, is that it's about getting in and getting yourself locked in on some really good discounted investments. But there's no signs at the front of the door saying these are the market's on a discount. You need to get yourself educated to know that that's the case. And I think, again, this is what this article is talking about, is get yourself educated, get that that financial knowledge to enable you to be able to grow your wealth effectively and efficiently. And so I think it's it's really a reinforcement of the message that I've been trying to promote, in that we need to get ourselves financially educated so that you're able to grow your wealth yourself. No one cares more about your money than you. I say that all the time. I won't apologize for that. Nobody cares more about it than you. So having that knowledge and that the tools and resources to be able to grow your wealth yourself is a really powerful tool. And I think ultimately that's what this article is telling us. Different ways to get in, ETFs, in the share market, get into the property market. But ultimately this one here, to me, is a little bit of a positive spin on all the negative news that's out there. So like I said up front, there's so much fear-based news out there, potential recession, interest rates rising, cost of living rising, banks in trouble in the US, all that stuff, very, very fearful stuff. And clearly the media loves that stuff. And this one is a bit more balanced in saying, let's come in and actually, be mindful that following the norm, following the crowd is not how the wealthy grow their wealth. And if we can be a little bit smarter about it, get that knowledge and information, and do some research, then we can be well positioned to grow our wealth in a far more effective and accelerated, ultimately, manner. So hopefully that's helpful. Like always, if you want to have a conversation about how we can help you get that education and get that knowledge and the tools and the resources in order for you to grow your wealth for the rest of time without the need for somebody else to do it for you, then reach out. Leave a comment down below. Reach out however you possibly know how to with us, social media, whatever it might be, and let us know that you want to have a conversation, and we can hook you up with a link to book a time that suits you. If you're watching this on YouTube, make sure you click on the subscribe button, which will be probably down there, and the little bell, which is probably up just over there somewhere, to get notified when we release a new video. And that way, that just helps more people get exposure. And if you're watching this on Facebook, do us a favor, like, comment, share, all three. That helps more people see it, and that way more people can get the information that we're putting out there. And we would love for more people to hear what we're saying, so that we can teach more people how to get to their end goal, which is financial freedom, of course. So hopefully that was helpful. Leave me a comment. Let me know what you thought. Let me know what you're thinking when it comes to these current news cycles and what's going on in the news, and how that's impacting your scenario. I would love to know, and love to give you some tips if I can. So Woody's Weekly Wisdom, episode number 17. Thanks for listening. See you again next week for another episode where we'll dive into some more of what's going on in the financial news. Cheers.